happens when the price doesn't manage to break the last lows, and it breaks the last high, indicating the first signal that the market could reverse from a downtrend into an uptrend. But be careful, as the change of character is not a confirmation. The confirmation of the trend reversal happens when the price pulls back to the downside, doesn't manage to break the last lows, and it goes up breaking the last high. So essentially, it invalidated the downtrend fundamentals of lower lows and lower highs and validated a market structure shift to an uptrend by creating higher lows and higher highs. Now we will apply both the break of structure and the change of character on the same price action. We will start from the simple structure to the more complex one, which is closer to the action price action, and finally applying all the knowledge to analyze on the charts. So starting from the simplest form of price action. On an uptrend, price going up. Pull back to the downside, which is the higher low, break of the high that marks the higher high, and we apply the bullish break of structure, pull back to the downside, which is a higher low, break of the high being a higher high, and keeps going until the price breaks the past low. It breaks the higher low, which creates a lower high. And this level is the change of character or the market structure shift. Then price goes up, but is unable to break the previous higher high, and it creates a lower high. Then it breaks the previous lows, which are the lower lows. And this level becomes the bearish break of structure. So this is an important confirmation that the market has shifted from an uptrend into a downtrend. So the most likely scenario is that the market will continue the recently created downtrend by price pulling back to the upside, not managing to break the last highs, and it becomes a lower high, and soon after break of the lows. So another bearish break of structure. And price action constantly repeats until the market shows an intention to reverse into an uptrend. And that indication of a shift again into an uptrend is a change of character that breaks the lower high. So it creates a higher high. Then a pullback to the downside that stays above the previous lows. So it created a higher low. So essentially, it printed a market structure of an uptrend. And then the price action should be printing bullish breaks of structure. Now from the downtrend, price going down, pull back to the upside, breaks the lows and prints a bearish break of structure. Pull back to the upside, break of the lows, bearish break of structure, and it keeps going until it breaks the lower high, which creates a higher high, and it maintains above the lower low by creating a higher low. This is change of character. And if price breaks the higher high and still maintains above the last low, it basically confirms the bullish break of structure that has shifted the market trend from a downtrend into an uptrend. And the bullish breaks of structure keep printing until the price breaks the lows, while not being able to break the highs. So it essentially printed a change of character. And the confirmation of the reversal happens when the price pulls back again to the upside, doesn't manage to break the highs, and instead it breaks the lows. So this creates a bearish break of structure, and the market has essentially reversed again. So this is a presentation how a market can shift from a downtrend into an uptrend, and into downtrend again. Now into the more complex price action, in which after we will analyze on a candlestick chart, upside pullback, break of the high that marks the following bullish break of structure. Now we enter into the more complex price action, the price pulls back. So remember that the pullback on an uptrend is a downtrend on the lower time frames. So knowing that we can also apply the breaks and shift concept on this price action. For example, here we have a bearish break of structure caused by the low time frame price breaking down the last lows, essentially creating lower lows. Then price pulls back to the upside and stays below the last high, meaning that it created another lower high. Then break of the last lows by creating another lower lows, so another bearish break of structure. So what often happens is when price respects the high time frame trend, in this case, an uptrend. The low time frame trend aligns with the high time frame trend and moves into the same direction, which in this case, it's to the upside. This break to the upside is met by a change of character inside the pullback. This type of change of character is named an internal change of character, or an internal market structure shift. So this indicates that the low time frame trend could soon reverse to follow the high time frame trend. The confirmation of the reversal is done by price not being able to break the past low. So by creating a higher low and breaking the past high by creating a higher high. And this confirms an internal bullish break of structure in which price follows through the high time frame and continues the macro trend. And from the complex downtrend price action, Here we will also apply complex